Good morning. It's day 19, Hur Fund. It is Wednesday, August 2nd, day 19. You're watching Live Futures Trading with Hur Fund. I'm Arthur Hur. Interesting stuff going on these days, right? We've got the Trump indictment. That's the latest one. Been a lot of them. But this is the one that's probably the most serious, the one that really might mean something. Not sure. Well, we're going to talk about that. I guess one of the credit agencies, rating agencies, Fitch, downgraded the U.S. from triple A to double A plus, whatever that means. We'll talk about that briefly too. But most importantly, let's talk about our position in oil. So here we are. Surprise, surprise, we're back to even. Okay, so I didn't expect this to happen. Let's get this down. 30.095.35, which brings us pretty much exactly around to 0% on the year. So hey, man, I'll take that over being down, $1,500 or something. So we fought our way all the way back. Obviously, we needed the stock to accommodate us, and I don't like making determinations or predictions or whatever it is, but I get a feeling that this fever in crude oil finally broke. I didn't talk about it yesterday because we were going through Trade Hur, but just want to show you some of the price action that happened overnight and the night before. So what happened was one of the things that I think has been going on recently in the markets in general and also in crude oil is I think a lot of people have been trying to go short. And what that does is it leaves a lot of vulnerability for short squeezes to happen. I think there are a lot of people that are trying to pull off, a Michael Burry, and like I said before, these moves happen very rarely, and to pull them off it's tough. I mean, it's really difficult. So a lot of people I feel were getting short, and then what you were seeing like last couple minutes of the trading day, these huge spikes up because people get short, put in some stops for a series of coordinated traders that pool capital or machines or companies with a lot of firepower, a lot of capital. They can easily run those stops. And especially at the end of the day, overnight, that's where you see a lot of this stuff happening, or right after the close, or whatever it is, people just closing out their positions. That happens. Usually at the end of large moves, we haven't seen any form of capitulation, but when capitulation does happen, usually what it is it's people being forced out of their trades because they've just gone too far. So what happened with crude? Well, 2 days ago, it was 2 days ago, it seemed like, it's kind of hard to show with this, but let's go with this. So this was I think on Monday, but if you look over here, this H will show that we topped out exactly to the penny at 82. All right, and if you watch any of my other live streams, and you've heard me talk about this stuff, is that I don't think markets top out or hit their lows for whatever it is, or top out or bottom out at like round numbers. All it does is it signifies a large block of orders and open interest that just got filled on an instant. And so usually, you'll see a huge spike or a huge one way or the other, and if it lingers in that spot, then you might see it pass through. But it is a form of like support and resistance, because there's a lot of like gamma that happens around these like significant round numbers. So I'll leave it at that. So what happened was we dinged 82, and then we kind of like sold off from there, and it seemed like that might have been it, because we kind of drifted down. And then I think again what happened, this happened. Did it happen overnight? No, I don't remember if it happened overnight at all, but it seems like it happened during the trading day. But what was happening was like towards the end of the day, you were getting these like crazy short squeezes, right? So you saw it happen here at the end of the day. You saw it happen here, and I'm just looking at the volume. You saw it here happen at the end of the day. You saw it here happen at the end of the day. Is that a lot of people I feel like were just trying to get short, and then they just got dinged by people just taking the opposite trade. So it's been happening, and 3 days in a row. At a certain point, it doesn't work anymore. So we hit 82, kind of drifted away from it. Seemed like a lot of people, myself included, thought like, oh God, I hope this is finally over, because can't take this. All we do is just go up. The market, your IRA is one thing. No one wants to see, like I said before, no one wants to see $7 oil or $7 gas to fill up your car, all right? No one wants high oil prices. So I don't think there's anything wrong ethically about being short oil or wanting to see lower prices in oil. Anyway, so we traded, finally went straight above 82. So the market wanted to see, okay, how many orders can I fill above 82? And we got to around 82.40. And that happened, I think it happened after the close. So, markets were thin, and there were some orders being filled. I guess, I didn't expect this to happen, because I woke up and we were still like kind of above, like flirting around, that 80 number, maybe a little bit below. But it seems like this fever is finally broken. So, if we can get back to 80, 78.50 is our ideal strike. Then we'd be looking good. I was gonna go into what I would do if we get into 84.50, and maybe we'll leave that for later. I'll just go briefly into it now. Essentially, I was playing around with this yesterday. I was like, okay, well, how do I demonstrate this thing? So this is our situation. Price is over here, right? Our ideal strike is kind of around here. We started, so this is how we started, right? We started with the price being somewhere here. We were like, okay, well, if it floats between 66.50 and 78.50, then we're good. It went beyond 78.50, so we had to put on this like kind of defensive maneuver, right? Which would, as long as it stays within this new range, which was like kind of shifting our range from before, but keeping the same range, keeping the same width of like, keep the same zone of profitability. As long as it stays within this range, we're good. Now, when we were going 82.45, 82.50, and I was just seeing my P&L just hit, go down and down again. I was like, all right, well, I have to be prepared for 84.50. So when you look at the position on its own, right, it's pretty much what's called a directional straddle. Is you want it to get to 84.50 and you want it to stop. So when you have both of these on, then you take whatever you collected for the trade minus the width of the strikes, right? So whatever it is, we collected 13,230. Subtract 12,000 from that, and that's what you would end up with if you landed somewhere in this range. Now, if we were to get to 84.50, we would have had to, and we still could, But if we get to 84.50, we will have to put on another defensive position to kind of shift where our zone of profitability is. Okay? So, I mean, the sort of textbook way, as far as the textbook that I'm writing right now, not actually writing, but I'm showing you, is to go. So we went from $6 being a range to $12 being a range, right? And now we go from $12 being a range. It's not going to be profitable within $12 anymore, but we go out to 24. So the thing is, all right. So we put the position on over here, and if it goes up this way, the inverse way that like a short strangle works is that when something goes closer to your short strike, you lose money on that trade. In this case, when something goes to our short strike, we actually make money on that trade. So this position is saying, hey, come to me. And this position is saying, come to me. And ideally, you want to be somewhere in between that. But if we get to here and you're like, this position is like, oh yeah, I'm good, I'm feeling nice, then this position is gonna hurt. So the same way that we put on our defensive straddle on when it got to this point, if we get to this point now we go out. So now we do the symmetrical thing, right? So we go $12 from here, we go $12 to here, so 96.50. And what that does is it doesn't really, you collect $30. So I don't know, is that really even gonna cover your commissions? I don't know. But I mean, the textbook, I don't know, whatever I'm defining as the textbook thing to do, is you go here, okay? And so what that does is it just centers you up again. Just make sure I got everything here. And then what's gonna happen is this whole thing, it's not gonna be as green. All right, because right now, because we're kind of up now, or almost break even on the trade, it's looking green, but everything is just going to be further below. So what we'll have to do is, so you put one trade on to kind of cap the losses on this guy, and let me show you what that looks like. That kind of looks like this, right? So you have this kind of this like super wide strangle, and all you're doing at that point is you're just capping your losses. You're saying, okay, if you are within this $24 range, okay, then you'll lose less, all right? And this guy is your little, okay, stay within the zone. And what if we do get to 84.50, probably what will happen is this whole thing will be kind of red, just the same way that this was red. And what we would do is I would probably put on just another 84.50 straddle on, and you wouldn't collect as much. Let's see what you collect if you put the 84.50 straddle on. All right, there. Right now it's $5 because we're trading further away from it. But I mean, the at the money is what, $3.79. So that's probably what you would collect if you were over there. So that would give you a little bit of extra wiggle room, so that if you were around 84.50, 85, 88 to whatever it is, 81, 81.50 and change, you'd be able to make back what you lost. But right now, hey, it looks like we're up a little bit, so I won't take that. I mean, no complaints. Let's talk about the Trump indictment, and let's talk about Fitch downgrade. So, regardless of how you feel about Trump, I mean, it's a pretty serious indictment. This is the one that I feel like everyone was waiting for. It was like, well, why are you going after him about this thing? Why are you going after him about that thing? And this one, I mean, no one can refute what happened on January 6th. It's pretty serious. Whatever your opinions are on it, it's important that we just go through the legal proceedings and everything, and he's obviously he's innocent until proven guilty. But I think what's most relevant is not my opinion on Trump or whoever else, or Biden or whatever it is. I think they both have merits, and they both have things that I would criticize about them. Both of them. I can talk for a while about the great things about Trump. Obviously bad things too. But to talk about the indictment and what it reminds me of, and of course things that happened in the past are not indicative of what's going to happen in the future, but what it reminds me of just like these kind of like news events, and these flash news events, especially ones that happen after the market close, are really interesting because they have a strong impact. But when something is just driven by news, and it doesn't really affect the markets in a significant way, usually it doesn't last that long. And the moment that I'm remembering is when Trump got COVID, in the middle of COVID. That's one of the ones that really sticks in my memory. And it was like, well, he's got COVID, he's old, he doesn't have the greatest health. This could be something. And it happened. The news was announced while markets were closed. The futures opened. They opened significantly lower. But eventually, that they traded higher. And the other thing that I'm remembering is, and it's kind of making the news again. I'm not exactly sure why. I guess there's some inquiries or there's more like news that was released about the assassination of al-Baghdadi, the ISIS leader, in 2019. That was also something that happened at nighttime in the U.S. And the announcement, as soon as it happened, you saw markets sell off really hard, and we had been going up and up and up and to the right for quite some time. I feel like any trader, that has seen normal markets, healthy markets, we were like, okay, well, this could be the start of something, because hey, it has implications as far as uncertainty in the world, in that region of the world. But markets sold off hard, and then they came back. So let's look at what happened that day. Or not that day, but let's look at yesterday. So, what this left us with, if you want to get all technical analysis about it, is it left us with a little bit of a gap. All right, so let me try to dupe. Let me see if we can kind of get this on here. Let's make it a different color so it's not so, something like that. And then, let's get this guy, and let's say it's over there, and it's a small gap. But it's a gap nonetheless. So I don't know if that's going to be filled in the near term or not. If you remember, let's look at something on the wider scale. Okay, so look, this is the gap from COVID. All right, so remember what happened over here. That gap did not get filled until we lost, about a third of the market. All right, so it eventually did get filled, right? But these things, you can't. You might have a belief that gaps will be filled, but when they get filled, that's the thing that you can never know for certain. Remember, also a reminder that we have this thing over here, which is I don't know, man. Like, if that would ever get filled, that would be pretty scary stuff. But I don't know. We've been there before, I guess. So let me put this up like so. right, and just say that's the lowest it traded after the gap happened. So I don't know. Will we ever get to 3,200? I don't know. Probably not. But like I said before, the new stuff is it's hard to trade it. It's hard to trade just based off of news because the market's pretty damn smart and it can see things into the future that only make sense after time passes. The other thing is Fitch downgraded the credit worthiness of the U.S. So that's really funny to me. I mean, these are the guys that rated the mortgage-backed securities from 2008 AAA. You know, these things that were piles of garbage. Just the very fact that this ratings agency wants to claim credibility is so laughable. I mean, how they are still in business does not make any sense to me. They are just a bunch of charlatans, and I would never give any of these companies the light of day. I don't know how they are still in business, but that's all I'm going to say about it. It's just ridiculous to me. The fact that we should trust what these agencies say, I don't know, man. Like, give me a break. Anyway, I think that's going to do it. D's back. Could you do $200 for Trade Hur? Yo. Also, how was the profit for Trade Hur? Was it consistently not profitable daily? Whatever to answer is, it doesn't matter. I still want to buy and develop it. No problem. I mean, hey, D, you should watch the other videos that I put out. I mean, just fast forward through them. You'll be able to hear everything I mentioned about Trade Hur, that it was not consistently profitable. Okay, so it was profitable like during like a 2-week period, like when I recorded the video, and then the week after. And then after that, I mean, you know, first of all, that video, when I was recording that video, it still had a lot of bugs in it. Some of the logic was a little screwy, so it was putting in a bunch of orders that were extraneous, and that's why one of the reasons why I got that 429, and why I was like thinking through some of the other stuff I was talking about when I was going through the code. But there was this thing called the request rate, and that was to prevent myself from getting a 429. So that was like, okay, well, when the number of requests per minute exceeds, you know, a certain ratio, just pause for like however many minutes. And I think I had implemented that for a while, but then eventually I kind of cleaned it up so that it was really a lot leaner, and so I obviously fixed all the errors. But what I didn't fix was how profitable it could be. So that's what happened with that, and that's the reason why I stopped working on it. I mean, I would have still worked on it if Trade hadn't started charging, you know, $400 or $500 a month in order to get access to the data feed. But they didn't tell anyone. I'm still kind of upset about it, and it just goes to show that, you know, when you build something on top of someone else's platform, you're at the mercy of whatever they choose to do. So I'm not gonna pay for that subscription anymore. If you want me to run it, if you want to look at the code base, if you want to have it, like I said before, it's $500. It's never going to be cheaper than that. The reason why is this. It's something that I don't want to like have floating around on the internet. And in order for me to put it up, like I just don't want to, it's not something that I'm like really dying to do. Something that's like on my local computer, and there's a private GitHub repo of it, but you know, I'd have to write up some documentation, do a bunch of other things, and it's not something that I'm like really dying to do right now. So hey, if you're interested in it, you know, that's what it'll cost. And the other reason why is, you know, I wouldn't really profit off of it. What I would do is I would just take those funds and put it into subscribing back to Trade. So if you're interested in buying the code base, then let's let everyone else that's watching this channel benefit from it, so that they can see what Trade Hur does and how it works, and I can show you in real time. I'll just run the thing and just show you what it's doing, because there are a couple of different shapes that it makes, and like, I don't know, it's been a long time since I've run it, but I'm not gonna lie, I miss it. I miss Trade Hur. It was kind of like a son to me. Named it after myself. And I always liked having it run in the background, you know, even though it was like losing money, fake money, but still, it was consistently unprofitable, let's say, with these like unexpected spikes where it would just do remarkably well. But when it would do remarkably well, it's like, well, the move already happened, so can you really do that in the live environment? That's the thing. It's like, it's so unpredictable when it does really well. So that's why I built a couple of those other like counting systems and other things. But yeah, that's what it is. I'm not thrilled to go back to it, but if you want to, then you can pay for it. And if you want to pay for it, then let's let everyone else benefit. Okay, so I'll leave it at that. You can revisit that video as many times as you want. You can freeze it on frames. You know, if you want to see how certain functions work and everything. But I'm just going to leave it at what I did yesterday, and that should be enough for you. I think that's going to be it for today. So thanks for tuning in.